We've got a really cool presentation today for you, a nice little workshop that's going to help you swing trade if you're into that kind of time frame. It's my preference for timing the market, and for people who don't want to spend a lot of time in front of their screen, it's really the ideal type of trading. So I'd love to get a show of hands. How many people here have heard me speak before or have seen one of my presentations? Go ahead and let me know in the chat room. I would love to see. Got you, Bill, Jim, HD, Arthur. Very good. Okay, cool. Bill, welcome. All right, so what we're going to talk today about is a strategy that I invented called the PayDay Cycle. And you could use PayDay Cycles to identify really, really great 4 to 8 day trends. This works for both bearish and bullish markets. We're kind of starting to turn the corner on all the bear trends that have been happening, and we're starting to kind of get bullish again in a lot of things. So we'll kind of cover on both spectrums for you. Okay, so what we're going to do today is we're going to cover the PayDay Cycle playbook. And one of the things I would like to emphasize today is this idea of probability stacking. Probability stacking is when you use a couple different indicators and signals together, and when they all get aligned, you have a really high probability of success. So I just want to paint that as a larger context for today. And what we're going to use to get started is something called the Heikin-Ashi chart. And so what I've done here is I've put both types of charts that you're probably familiar with, the regular candlestick chart on top of the Heikin-Ashi chart. So you can kind of visually see some of the main differences between them. Okay, just as a show of hands, how many people here have used a Heikin-Ashi chart or have traded with them before? Go ahead and let me know in the chat room. Some of the key differences are a candlestick, while it's good for identifying individual price patterns and candlesticks, it's a little choppier, it's a little harder to read. There's no clear cycles, which makes it a little harder to trade from. The Heikin-Ashi chart is smoother, it's easier to read, there's really clear cycles, and that makes it easier to trade from. So what I want to do here is on the Wall Street IO platform, which is what I'm using here, I'm going to go ahead and flick back and forth from a candlestick to Heikin-Ashi. And you go ahead and just let me know in the chat room, what are some of the key differences you see in these two charts? And I'm going to switch over to the dark theme. Let me know if you like that better. It's a little easier on my eyes. I prefer the dark theme. But basically, here's your Heikin-Ashi chart. Here's your candlestick. So see things like it smooths out the trend. It eliminates some of the noise. There's no gaps. All of those are correct. Just started and love them. Awesome. Tom says I use. Very, very cool. Okay. Anil, good to see you. Awesome. Welcome. All right, cool. So those are some of the basic differences. You have a chart that smooths out the trend. It makes it a little bit easier to see these naturally occurring cycles. And then you have a candlestick, which again does have a use, but it's a little bit harder to see. There's a lot more noise. And that's why I really prefer to swing trade based off of some of the signals I'm going to show you today on the special Heikin-Ashi chart. Now, I'm using the Wall Street IO platform. This is a platform that we built to help us backtest the Heikin-Ashi chart as well as a bunch of other indicators. We actually started out as a social network. And as our social network began to grow, a lot of people kind of came into our group and were asking questions like, hey, does it work if I buy when the stochastics crosses over? Or does it work if I buy when the 8 EMA crosses above the 21 EMA? Or does it work when I buy when the RSI crosses a certain threshold? So to help answer some of those questions, we used to backtest and do all this stuff by hand in an Excel spreadsheet. And after we kind of grew to one of the largest paid communities for traders, we basically reinvested into a bunch of really great engineers, and we built an easy to use drag and drop backtester. So for example, I can backtest all of those things I just showed you, like backtest the MACD in just one click. It shows you all the stats over here and how it's performed. And this backtester, the drag and drop, is available on 8,000 stocks and ETFs. I'm going to use it today to help backtest this idea of a PayDay cycle, which is my favorite way to trade. Okay, so let's jump right into the slides. Some of the main advantages to using the PayDay cycle method, which again, a PayDay cycle is simply a 4 to 8 day trend in a stock using a Heikin-Ashi chart. One of the advantages is that it takes advantage of naturally occurring cycles. These cycles, as I showed you here on the Apple chart, these cycles are already happening anyway. So whether I use them or not, they're already happening. So I might as well take advantage of them. Okay. It also gives a really, really clear buy and sell signal based on the color of the chart. This is the best day-to-day directional and momentum gauge that I've found. I think it's better than a lot of indicators because indicators are generally lagging indicators, where this actually gives you a day-to-day signal on both momentum and direction. And the momentum helps because that's a good gauge of acceleration or deceleration of a stock. Now, it also has a great risk reward when used on stocks and index ETFs. I'll show you all the stats of how well it's performed for the last year to 3 years. And the cycles generally last between 4 and 8 days, which makes for really great swing trades. Okay, so I just kind of want to cover that definition again for everybody. Right, today we're going to talk specifically about the PayDay Cycle method. The PayDay Cycle is a 4 to 8 day trend using a chart called the Heikin-Ashi chart. There's a lot of platforms out there that have the Heikin-Ashi chart. You can get them on Thinkorswim. E-Trade probably has them. A lot of platforms have them. Wall Street AO, the platform I'm on right now, is the only one that allows you to backtest them, which is incredibly important because then you get to know how effective it is on the stock or ETF that you're trading before you actually put money to work. Okay, are there any questions so far? Let's see. I got you. Ron says it's easier to spot trends. Jim says it's better. This is very cool. Ed here says, I'm actually a client of Wall Street AO, very cool, and I cover the entire cost of the course on my first trade. That's awesome. Thank you, Ed. That's really cool. Just out of curiosity, Ed, was that an Apple trade or another trade? That is great. I love that. That's so cool. All right, so let's keep jamming. What we're going to do is we're actually going to take a look at some payday cycles, and I'll give you some quick examples of how I use them and what to kind of expect when you see them. And here's Apple. I'm kind of an Apple specialist. I've been trading Apple for a long time. We've just completed a series of bearish payday cycles. Again, a bearish payday cycle is when the candlestick's red. With a Heikin-Ashi chart, it's going to be a little different than your normal candlestick. When it's trending down, you actually have wicks on the bottom and no wick on the top. And also when it's trending down, you can see that the body of the candle here actually starts to grow. And as momentum decelerates and slows, the body of the candle starts to shrink. So a really, really great way of gauging momentum with these special candles is to look at the body size of the candle. As you can see throughout some of these really great bullish payday cycles, as it was accelerating to the upside, the body of the Heikin-Ashi candle started to grow. And as it decelerated on the top of resistance here, the body of the Heikin-Ashi candle started to shrink. And that's one of the reasons I love this candle, because it's visually makes it so much easier to see direction, acceleration, and deceleration. And those three things are basically almost all you need to swing trade a stock. You need to know direction, you need to know whether it's accelerating, and you need to know whether it's decelerating. Now, from all the back tests and all the trades that I've done over the last 10 to 12 years, we found that these payday cycles on average last between 4 and 8 days. Now, sometimes they last a little longer, 9 or 10 days, but it's very rare to get cycles, especially on the tech stocks that I like to trade, and ETFs I like to trade that last longer than that. In fact, when I open up my back tester here, I could just drag and drop the payday cycle right into here. And what this is going to do, it's actually going to back test this strategy for me on Apple, and I'm going to show you some of the results. Basically, what we're testing is how well would we have done if we would have used this style of trading on Apple, buying on the first green bar and selling on the first red one. And we're going to do that at the close. That's what we're testing. So it's a very simple strategy, as you can see. We're going to buy on the first green one and sell on the first red one. It can't get any easier than that. So I'm going to come over here and click View Stats, and I'm going to see right away some of the stats here for Apple. Now, this is the most basic form of a payday cycle strategy. I haven't done any probability stacking to help myself in my strategy eliminate some of the false starts or anything like that, which I'm going to do in a second. But you can see right off the get-go, it's got a pretty decent risk reward. The batting average can be improved. I'm going to show you how to do that in a second. And you tend to get about 32 trades a year. The strategy has worked 9 out of the last 10 years. And when I scroll down, I get some really great information about this strategy. And again, what we're testing is buying on the first green, selling on the first red. I can see what the average gain is, which helps me gauge profit targets. I can see what the average loss is, which helps me gauge risk targets and also can help me position size. I can also see down here how long this strategy tends to last. And again, if we're to take every payday cycle over the last 3 years, its average win length is 7 days. The average trade length is 5 days. Now, this information is incredibly important because it helps set up the expectations for the trade. So if you're trading a payday cycle and you're expecting to be in it for 20 days, well, the data here actually says it's more likely to last about 7 days. The reason is that is important is, one, to set up the expectations for the trade. Two, you could actually calendar in your calendar, right? Make a note in your calendar when you're likely going to close it. And for option traders, it's incredibly important because it helps you know how long to buy for your options. Now, this strategy is a really popular strategy for Apple amongst our community. The way that this platform works is whenever you backtest something like a payday cycle, if you come up here and click follow, you can see mine says unfollow because I've already followed it. If you click follow, our system recognizes that and then sends you an email notification for when this strategy starts and stops. As I mentioned earlier, we are one of the largest communities of stock traders, a paid community. There's over 1,000 people following this strategy on Apple, getting notifications for when this payday cycle starts and stops on Apple. Okay. Are there any questions so far? I'd like to make sure that everybody understands at least the basic foundation of what a payday cycle is, how long it normally lasts, because that information is what we're going to use to kind of move forward before we go to the next step, which is going to be covering something that we call probability stacking. Now, I've shown you Apple. Let's go ahead and take a look at the Qs. Now, whenever I change tickers, as long as I keep this payday cycle test here in the back tester, it shows me the stats over here for the new ticker. So now that we're looking at Qs, we can see the payday cycle results of trading the Qs. The Qs have a really good risk reward. 2 risk reward is amazing. It means every time you trade, if you made 100 trades, when you win, you'll win 2, and when you lose, you only lose 1. That's a really great risk reward. That risk reward is a very profitable risk reward ratio. And this strategy has worked 10 out of the last 10 years. You get about 34 trades a year out of it, okay? Let's take a look at another one. One of my favorite ones to trade recently is Netflix. Netflix has phenomenal payday cycles, right? So you can see sometimes they last even more than that 7-day normal phase. Some of them can last 10 or 12 days. And so when you can ride these payday cycles using calls or using even stock, there's such a huge opportunity because it not only gives you exactly when to get in based on the green bar, but it also gives you a really easy way to gauge momentum and acceleration. And it tells you exactly when to get out based on the red bar. It's a very simple formula. It's probably one of the easiest buy and sell signals that I've ever seen. And this is basically what I like to use for my trading. Netflix has a phenomenal payday cycle record of 2.7 on risk reward. That risk reward is unheard of. It's absolutely insane how good a risk reward that is. That means if you made 100 trades, when you win, you'll win 2.7, and when you lose, you only lose $1, a 1. So really, really, really great risk reward. This strategy actually is outperforming buy and hold on Netflix. You can see that comparison chart here. And again, if I like the strategy, I can click follow. You can see I'm already following it. And that makes sure that I get a notification every time this payday cycle starts and stops in Netflix. Okay, so let's go ahead and see if there's any questions. Ed says it was on Apple. Awesome. So Ed says one trade on Apple paid for a whole subscription. That's so cool. Arthur says the candle width shrinking. That's the Heikin-Ashi, exactly. So when the body is accelerating and growing, then you have acceleration. When the body is shrinking, you have deceleration. Jim asks if you could use it for Forex. Right now, our platform covers 8,000 stocks and index ETFs. And those are good for, Amex, NYSE, and NASDAQ. We don't have Forex or futures yet. That's one of our big goals for this year. And so I would say that it probably works. But if you kind of get to know me as a trader, you'll know that I always backtest and validate my ideas before I trade. And since I haven't been able to do it on Forex, I can't say for sure whether it works until I actually validate it. And that's one of the big lessons I hope to instill on everybody today, is that you absolutely need to backtest and validate your ideas. If you're using a moving average cross, you need to backtest it. If you're using stochastics or RSI, you have to backtest it. The backtesting is available out there for pretty cheap, and it's important to do because otherwise you're kind of just guessing whether it works or not. Okay, so absolutely backtest. Very, very cool. Arthur, okay, thank you. Okay, so let's continue to jam. Now, earlier I said we're going to use something called probability stacking. Now, probability stacking is a way for us to eliminate some of the false starts in trades. What is a false start? So I'm going to go ahead and highlight for you some of the false starts I see right off the get-go here with Apple. A false start is basically when you see the first green bar, but it does not show follow through, it ends up with a losing trade. So I'll highlight a few of these for you. Okay, there's actually a false start there too. There's a few of them in here. So I'll kind of just highlight that phase. There's one here. Let's kind of go back. Here was a false start here. So does everybody kind of understand what I mean when I say false start? Where it looks like a new payday cycle to the upside is going to start, but then you show no follow through. It ends up more or less only lasting a couple days. So one of the big distinctions here is, or questions, how do you know when you're trading whether the strategy you're using is going to last, or this payday cycle you're using is going to last, 6, 7, 8 days, or if it's only going to be a 1 to 2 day trade? Because that's a huge difference. If it's only 1 or 2 days, it's very likely you might get stopped out. But if it's 6, 7, 8 days, then you get these really nice long cycles and you can make a ton of cash. So these are the false starts. I want to make sure everybody understands what they are because they're no bueno. Like, we want to avoid these false starts. Okay, so we're going to move on to the next step, which is going to help us eliminate some of these false starts, because the problem with trading payday cycles is sometimes we have false starts, and that's just the reality of it. Okay, now the interesting thing I need to address here is that even with these false starts, because the risk reward is so good, you really only lose a small amount on the false starts. But if we can eliminate them, right, then we can boost our profitability even more. So next I want to show you how to cut these losing trades and false starts using that idea of probability stacking. You want to wait for multiple things to get aligned with each other before moving on the trade. And so we're going to actually use the MACD for that. And I want to give you a quick little 1-2 on the MACD. It's a pretty simple thing. It's a momentum and directional indicator. It tends to last about a month or so, which is perfect for payday cycles because you generally have several payday cycles within one MACD cycle. The MACD is pretty straightforward. When the black line is above the red line and trending up, it's bullish. And when the black line is below the red line and trending down, it's bearish. Okay. Now, some of the secrets to using the MACD is that bullish payday cycles, these bullish cycles, are longer in length when the MACD is also bullish. And when the MACD is bearish, the bullish payday cycles are shorter. You're more likely to get a false start. You could also use the MACD for divergence. When the MACD is making higher highs and higher lows and the stock is making lower highs and lower lows, that's generally a good signal of a shift in trend. You could also use it to identify choppy markets when the MACD is sideways like this, because generally we have a choppy market, and choppy payday cycles can also create some of those false starts. So let's look to see how this MACD can quickly improve our results. So what I'm going to do right now is I'm going to go ahead and put the MACD into our backtest. Okay, so what's cool about this backtest we built, one, it's drag and drop. Two, the results are instant. You don't have to wait for them. But three, you can stack indicators by creating AND conditions as well as OR conditions. So let me show you how that works. I'm going to go ahead and just drag and drop MACD in there in both these areas. I'm now going to use the MACD for my sell condition. And basically, I want you to come over here and check out the results now of the strategy. We went from 1.5 or 1.4 risk reward and a 40-something% batting average to a 2.6 risk reward and a 59% batting average. The reason that happened is because we basically have now eliminated a lot of these false starts. Okay, so I'm going to go ahead and throw the MACD on the chart, and you can see what I mean. So when we look at these false starts that I've highlighted here, many of them, if not almost all of them, probably occurred. Let's go full screen here when the MACD was bearish. So let's go ahead and take a look right here. I'm going to highlight for you this period of time when the MACD was really bearish. Okay, and here. And what I want you to do quickly is just to look up here at these false starts, and you can see that most of them happened when the MACD was bearish. So if I was to kind of teach you one thing today, it's how to stay out of trouble. And you can do that very simply by avoiding getting long during these bearish MACD phases, because the probability is simply against you. We would consider that to be a counter trend trade, and a counter trend trade generally has a lower probability of success. Now, this is something I've understood and known for a long time, And it hasn't been until we had this really cool back tester that we built a few years ago where we've actually been able to validate it using real stats that, hey, if you simply just avoided buying Apple or a lot of these stocks we'll show you today while the MACD was bearish, if you avoided the bullish payday cycles, you avoided a ton of losses. So if you remember, we had about 30-something trades per year, and the batting average was a little under 50%, so 10 to 15 losses throughout the year. Now, right off the get-go, I can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades were pretty obvious false starts because the MACD was nasty. So if you just use the MACD, your batting average can bump up in a really, really big way. You can see it's almost a 60% batting average. With this kind of batting average and this risk reward, you now have an absolutely phenomenal strategy that's been back tested and validated over time, and it continues to perform. And as I mentioned earlier, the way our platform was designed is anytime you have a good strategy that you like, that you put in the back tester, and you like the results over here, you just click follow. You can see I'm also already following this one. And our system sends you a notification for when this strategy starts and stops. It's pretty rad. Okay, so does everybody understand this idea of looking for areas where we can potentially cut these false starts out of your trading strategy? Does this make sense to everybody? Go ahead and let me know in the chat. Question, does it work on intraday? Absolutely works on intraday. Our platform does not yet test intraday, but that's probably coming soon. Jim says, thanks. What's the risk reward for the SPY? We can take a look at that in a little bit. Okay, Bill says thumbs up. Awesome. Any questions so far? Hopefully pretty straightforward, but the main idea is we want to cut these false starts. The other thing to understand is, remember the payday cycle formula I gave you, buying on the first green and selling on the first red. Even if you took all of them, it's still a very profitable strategy. But for many of us, we want to constantly improve our strategies. And if we can eliminate some of these false starts, then we'll have even larger wins, and we'll cut out a lot of the trades that are very likely going to result in losses. Okay, everybody with me so far? Yes, yes, yes. Awesome. Bill, Tom, thank you. All right, questions, let me know. But one of the next steps, because I like to use a triple layer probability stack, is some months are seasonally more bullish and some months are seasonally more bearish. So how do we know which is which? So one of the things we did here on wallstreet.io, which is our social network that now has all these cool tools that we built for our community, like the backtester and the scan, and being able to view the stats and get notifications. One of the things we did is we built a really great seasonality chart. So before I load up seasonality, I'm going to unclick these so that our seasonality chart actually is impacted by any results we have. So I'm going to click on seasonality. And seasonality is really cool because with seasonality, you can look at a stock and how it tends to perform month by month. And in most cases, you start to see some very interesting patterns. The cool thing about seasonality is we have the seasonality data all year long. So we can use it to start planning for the month that's coming up. It's kind of a way to look into the future a little bit, to look for potentially really bad months or really good months. Now, here's Apple over the last 3 years. Let's change this to 5 years, a little bit more time frame. You can see that we're coming into seasonally a pretty good month for the stock. Now, we need to have good earnings for this to happen again in February, but February, March is usually pretty good. May is also usually pretty good. July and August is usually good. November, December, January is normally bad. Now, for a lot of people who didn't know that November, December, and January, 3 months in a row is really bad for Apple, they could have been buying the stock, buying calls during a seasonally horrible time of the year. Now, it breaks my heart when I see people do that because the stock's been pulling back along with the market, and there's no reason that people should have been buying calls in Apple because seasonally we're just in a sucky time of the year. But without the information, how are you supposed to know? Okay. So here's how I like to use seasonality. I've got some slides here for you. Some of the main benefits, again, to using seasonality is you can discover a possible bullish month coming up. I've highlighted a few of them here. Now, this gives you a whole new perspective on upcoming trade setups by allowing you to ride longer-term seasonal moves. Just as a reference, we have this seasonality information on all 8,000 stocks and ETFs in our database, not just Apple. Okay, so if you want to use seasonality Microsoft or Netflix or USO or SPY or Qs or anything, you can. Now, the next benefit to seasonality is you get an early warning for seasonally bad months. For example, April, June, November, December, January, seasonally bad months, right? This is important again for swing traders, day traders, and even long-term investors. Now, the big benefit here is that the largest moves of the year that just happen a few times a year tend to happen when payday cycles, the MACD, and seasonality all get aligned. Do you remember I mentioned earlier this idea of probability stacking, right? It's not just guessing, it's literally using all the data so that when several things come together, we get these enormous moves. And I mentioned earlier that I'm a swing trader, and I really don't like to spend a lot of time in front of my computer. So if I can just make a couple trades a month and a few big trades a year, that's perfect for me because I can make a lot more in less time, right? So a good chunk of your profits can actually come during these periods of time. So let's take a look and see how that works. So the most bullish time of the year for Apple is February, May, and July and August. Now, the cool part is a year ago, we had this information. So it's not like we're just looking at it now. We actually had this information at the beginning of last year, so we could prepare for the whole year in advance. We could actually create our trading calendar months in advance, right? That's going to help us plan vacations, plan family time, all that stuff. Now, it just so happens when we look back on the year, the three largest trades of last year happened, surprise, surprise, February, May, and July and August during these big, huge cycles. So we're more likely to get those really long, like 8 to 10 day payday cycles. We could absolutely crush on your call buying or your stock buying during those times. Okay. So I want to kind of highlight that for a second before I move on to the next slide. I got this cool picture of me and my daughter. But let's go ahead and take a look again at the chart. Right. So earlier, we mentioned this whole idea of payday cycles and how payday cycles by itself works without any probability stacking, right? It's got a good risk reward. Now, then we talked about the idea that sometimes the problem with payday cycles is we get these false starts. However, we could eliminate a lot of these false starts by simply using the MACD. And when the MACD is bearish, we tend to have more false starts to the upside, right? You're going to trade less, but the trades you do take are going to be a lot more profitable because it boosts your batting average and the risk reward of your strategy. And then we just added a third element, which is very unique to Wall Street AO because, again, we're back testing all this stuff and we have all the data to collect instead of guessing or using our emotions or anything like that to trade or trying to read an article on whatever website to like get your trading from. We actually are going to be able to use real data for it. Now, this is the cool part. When we start to put all these things together, we start to get a really, really powerful strategy. And if you, again, look at the data of seasonality, the end of the year is generally really bad for Apple, and that's exactly what we've had. Okay. However, July and August, I'm going to go ahead and make some highlights, or I'll get my line tool. July and August are usually really, really good for Apple. And then right at the end of August, literally right at the end of August when we entered September, which is usually bad for Apple, we had a MACD crossing to the bears. We stopped getting accelerated moves to the upside and ended up slowing momentum and then moving to the downside. And this whole phase to the downside, the MACD was bearish. So there really shouldn't be a lot of people taking bullish trades during that time. Seasonally, it was bad. The MACD was bad. You should have been short, right? Fast forward and rewind, I guess. May again is usually really, really good for Apple. This May we had seasonally a good month. We had a beautiful payday cycle. We had a MACD that was bullish, confirming. So all three got aligned. In June is usually a bad month. We had bearish payday cycles, a bearish cross in the MACD, and a bearish month. So I would strongly encourage you, when those are the case, not to buy calls. And the biggest thing with trading is, for a lot of people, they make a lot of good trades. It's just a few trades a year that wipe them out. And so if you can avoid those times by using data, it's going to help you out a ton at the end of the year. Okay. So during these big months, right, this is when I'm absolutely loading up on calls, right? I will very likely have 2 to 3 or 3,500 delta, which means during these really good times, I'll be making $3,500 for every $1 move up. Now, we're not there right now. We're not in that climate. But when we have all three signals aligned, we are absolutely in that climate. And I have no problem absolutely, I use the word absolutely a lot, but totally loading up on delta, right? With a few thousand delta, I'm perfectly comfortable with that. We're not in that climate now. And when we are again, I will do it again. But there's only a few times a year when that happens. And that's when you really, really load up your position. Okay. Now we're starting to get closer. We'll see how earnings comes around this January. Go ahead and let me know in the chat room if there are any questions so far. But we've covered a lot of really deep information that I hope helps. Again, payday cycles, naturally occurring cycles are already happening anyways. The idea you can use a secondary indicator and use probability stacking to cut out the losing trades. And then third, the idea that there's some times throughout the year that are seasonally just a lot better to trade from. Now, the important thing to recognize with seasonality is that I don't like to use seasonality in a vacuum, which means I'm not going to place a trade 100% on seasonality, but I will place a trade when all three work together. Because when they don't work together, it's just a time to sit on your hands or position size a quarter size or something. October is a really good example for that. Seasonally, October is usually pretty decent for Apple. However, this October, the MACD was bearish, which means the probability of getting long and having a good seasonal month is bad. And so we just have to use that information and use it appropriately, if that makes sense. Questions so far? Let's see what we got here. What are some of the biggest highlights so far from today? We've only been 30 minutes in. We've already covered a ton of stuff, right? Yeah, somebody, Harry says, this seems really great for options. Absolutely incredible for options. What's the histogram in the upper right? This right here? This is shows you each year and how well the strategy worked. So when I built this system with our engineering team, I wanted a way to quickly get a snapshot of how well the strategies worked, not only over the time frame we're testing, but over the last 10 years. Okay, and in doing so, I had them create this really cool little histogram, right? The histogram, again, shows you how well the strategy worked in a snapshot over the last 10 years. And so what you want to find is you want to find strategies that have most of these green, right? Dr. J says, so in a bear trend, you just don't go long, you keep going short when it turns red again. Yeah, so there's a couple ways to manage that. I have specific types of entry and exit signals that I look for. That's a little bit more advanced for this discussion. But essentially, yeah, the idea is when everything's bearish, like seasonality, the MACD, and you're in a bearish payday cycle, you either sit on your hands in cash, which is a position, right? Cash is a position, or you go short, right? Depending on your comfort level. You could buy puts, do a put spread. There's a lot of ways to get negative delta and go short. The number one job of a trader is to preserve capital. It's actually not to trade. So for a lot of people, many people tend to overtrade, right? Because there's this idea in the real world that we exchange time for money, right? And so for a lot of people who spend a lot of time throughout the day looking at their charts, they kind of have this feeling like, oh, well, I'm here and I'm looking at my chart, so I have to trade. And that thinking is very dangerous because it tends to have a lot of people force trades and take trades that are B or C trades instead of waiting patiently for the A+ trade setups. And again, for a lot of people, they make a lot of good trades throughout the year, and it's only a few times a year they make bad trades because they might be trading because they feel like they have to trade because they're at their computer, and they may not understand that the risk reward is really bad or that the probability is against them. And that over trading tends to have a lot of people lose out. And it also means that your broker is going to win because you're paying a lot more in commissions. So that's my 2-minute rant on over trading. Let's see. Do we have seasonality for QQQ? Absolutely. We have seasonality on all 8,000 stocks and ETFs. Okay, let's see. Okay, we just got a ton of questions in here. So if I miss any questions, I apologize. Okay, we have another community member here. This is really cool. I hope I pronounced your name right. Ryan, they say, one of the things I haven't even mentioned yet is we do have an incredible community, and thank you for that. They say, don't forget one of the best things about Wall Street AO is an incredible community of analysts. We have a pretty deep community. And the reason for that is Wall Street AO actually started out as a social network. We built a social network platform for me and my friends to mastermind and share ideas on. It basically started out as a stock forum. And as I mentioned earlier, we started to grow really fast. And a lot of people would come into our group and they'd say, hey, Micah, do you know if stochastics works when you buy it when it crosses, or should I be using the 8 when it crosses the 21, or should I buy above the 50-day moving average? And there's a million questions that people heard from all these random strategies they got on forums or whatnot. And we finally just came to the point where like, let's just build a sweet back tester where we can back test all of this stuff instantly and make those back tests available to everybody so that no matter what you read on a forum or what you come up with in your own head, you can instantly back test it to see. And so, yeah, we do absolutely have a really, really deep community, and we also have some sweet tools. So thank you for that. I appreciate it. And I'm glad that you are enjoying our presentation. Okay, lots of questions about the replay. You're going to have to ask Renee, the person who's running the expo for replays. I'm not sure how that works exactly. But I'll give you some more information of where you can learn more about payday cycles in just a minute here. Okay, so let's kind of keep jamming. This is me. I've got this funny Santa hat on. This is my daughter, Jules. I have twins. Their names are Jules and Kelvin. They're turning 3 in 2 weeks. Maybe it's only a week from now, on February 5th. My wife has a degree in physics and nuclear engineering, so we thought Jules and Kelvin were just the perfect names for our kids. I'm a stock and options trader. I've been trading since, gosh, it's been about 10 or 12 years. My big goal was that I wanted to make as much money as possible without spending a lot of time in front of the computer, and I really wanted to spend more time with my family. The problem was that I make really, really big wins, but in the end, I tended to overtrade, and this resulted in high commissions and lots of losing trades and a lot of frustration. When I discovered the payday cycle method, after a brainstorm I had with a quant, it really changed my trading because it allowed me to, one, identify quick and easy entry and exit points. It allowed me to find trades with good batting average and good risk reward. And two, it actually had me trade less because I started cutting out these times in my trading where I was trading during low probability setups. And since then, I've been off to the races. Currently building my dream home here in Santa Barbara. You can see this big house right here, my guest house, overlooking Santa Barbara Channel Islands. I get flown around the country now to teach payday cycle methods to people and show them how I trade with it. This is me in Phoenix, teaching at an options trader group. This is me visiting the Tasty Trade studio. This is me right here. The only time you'll probably ever see me wearing a tie. Jake Pelly, my option trading associate, Liz, Jenny, Tom, and Tony. Tom here started Thinkorswim. You're probably familiar with him. He sold it to TD Ameritrade for like $600 million, now runs Tasty Trade. Really, really great guy. When we came to visit, walked us around the whole place. Really cool guy. I've been lucky enough to meet a lot of these great people, now have the opportunity to help other people. And like I mentioned, when we were a social network, before we even had all these great tools, because our community started to grow, I got to meet some great people like former floor traders. I met a former billionaire hedge fund manager, former market makers. And there's this consistent theme throughout a lot of these professional floor traders and market makers. They're mostly specialists. And let me describe what that means. Is I'd say, hey, what are you trading? And they say, oh, I'm trading corn this week. What did you trade last week? I traded corn last week. What are you trading next week? I'm trading corn next week. Wait, what did you trade last year? I traded corn last year. They're like, oh my gosh, you're a specialist. They're like, yeah, I basically only trade this thing. And what I discovered was a lot of these people who worked on the floor and were these professional traders only traded a couple things. They kept it super simple. They did not have a watch list with 100 stocks on it, flicking through 1 million stocks all day looking for stuff. That's not how the professionals did it. They only had a couple things that they traded. And the benefit to that is you're less likely to get caught off guard. You spend a lot less time trading. You develop a pattern recognition for the stock that you're trading, and every stock trades a little differently, and you start to get familiar with that. And so I was like, oh my gosh, all these people are specialists. And so one of our big things that we've done at Wall Street AO is we've begun to teach people over the last few years, you're going to be a lot better off just picking a handful of stocks, like 3 to 5 stocks that you know payday cycle really well, and just trade those. You'll trade less, you'll be more profitable. There's so many benefits to that. And for a lot of people, there's a lot of misinformation out there about over trading, that you have to have 20 to 30 open positions, adjusting them all the time. I feel like the brokers made that up to get you to trade more. And it's really it's really misinformation. And the professionals actually mostly just trade a few things. And so we're trying to get people to simplify their trading at Wall Street AO by using that idea that it's better to be a specialist than a generalist. And if you're here and you have 20 or 30 open positions and you're totally frustrated and overwhelmed because you can't manage that much, then Wall Street AO is probably the perfect solution for you. Okay. So what's possible when you use the payday cycle method? This is Marco. Marco was a break-even trader from California. His goal was that he wanted more consistency in his trading. His problem was that his account was flat for many years in a row. He'd make money and then he'd lose it. This is his screenshot he was generous enough to share with me. He'd make 10 grand, lose 15 grand. This point right here, this inflection point, is when he started trading with payday cycles. He had a breakout in his profitability curve. Before that, he had no curve. His profitability curve was flat, meaning his broker was winning, right? He had no strategy either. He was just kind of going with his hunches, right? Shooting from the hip. And then he started trading with an actual strategy that's been back tested and validated, which is the payday cycle method, right? The result was he made 120 grand in only 2 weeks trading Apple and Alibaba cycles. He got these perfect like 8 or 9 day cycles with calls. He created more consistency in his trading and finally has a positive profitability curve. I think last year he made over 100 grand just trading Amazon payday cycles. The previous year it was Tesla. He only trades a handful of stocks. He trades a lot less. He's a lot happier, spends less time in front of his screen, and makes a lot more cash. This is Lisa. She's now a good friend of mine. Lisa is a stay-at-home mom from California. Her goal was to make more money from home, working part-time. She struggled, though, finding good entries and exits. She actually joined Wall Street with zero knowledge of technical analysis. By creating a routine with the payday cycle method, her first year, she had 86% batting average. And the result that first year was we helped her turn her $100,000 account to 320 grand. And that was only using stock, by the way. Lisa says, before entering a trade, I always refer to my payday cycle charts inside of Wall Street AO. So here's how I can help you. We've put together an amazing course called the Payday Cycle Masterclass. It's a 6-week course, okay? Now, the idea behind the Payday Cycle Masterclass, or the goal, is that it's designed to help you create a breakthrough result in your trading. Not just make more money. We actually want to have you create breakthrough results in your trading. So as a breakthrough result, going from 100 grand to 120 grand or 125 grand, well, that might be nice, but that's not a breakthrough result. A breakthrough result is if you're waking up in the morning and you're frustrated and you're managing too many positions and you don't have a strategy that's been validated and back tested, and you're just kind of frustrated because you're not really gaining any traction, and you move from that phase to waking up, sipping on your coffee, feeling relaxed, spending only 30 minutes to an hour in front of your screen and making a lot more money, and being able to relax while you're trading, I would consider that actually a breakthrough result. So the goal of this workshop is to help you create a breakthrough result, not only make more money, but have a breakthrough result in your life too. So I coached a student once. This is a perfect example of a breakthrough result. Down 300 grand. And in 18 months, I helped him make that back plus a half a mil in gain using payday cycles and the MACD. And I checked in on them a little bit later. They're up $2 million. So that would be a breakthrough result, right? Using this strategy. The Payday Cycle Masterclass, again, it's a 6-week workshop. The price of it is $2,997. I'd like to let you have that course today as part of a bundle I'm putting together for you right now so that we could really help you accelerate your trading. The next thing I'd like to give you is our 90-day roadmap. This is going to be what takes you to the next level after the Payday Cycle Masterclass. The Payday Cycle Masterclass is going to kind of teach you how it works. The 90-day roadmap is going to show you how to actually apply it into your world and your life. So if I was a fly in the wall watching you trade for 30 minutes every day, what would I actually see you do? Okay, so the whole idea here is if you want to get your trading because you're super busy and you want to do other things, but you still want to make a bunch of cash, if you want to get to 30 minutes a day, this is what you need. We're going to show you how to get started, a little bit more advanced payday cycles. We're going to show you how to apply it to options trading. We'll show you the best stocks to use for payday cycles, the best option strategies to use. We'll give you our trade journal, which will help you create more accountability and help you measure your success, which is important. Then we'll move you to more advanced strategies because payday cycle is one of the 4 strategies that we'll teach. And that gets you into the world of predictability and the world of profits. This is a 90-day roadmap that gives you accountability over that process. Because I don't want you to just to take a few videos and watch it. Like, you need to apply this into your life as part of a routine. So you need to learn that routine and then have some accountability to keep it in place for at least a few months while you get up to speed. Okay. The 90-day roadmap is $1,997. Okay. The next thing I'm going to give you is our Wall Street AO membership. Okay. This is the whole platform. You're going to get daily email notifications for any strategy that you follow. So when I say the Wall Street AO membership, what I mean is this whole thing that I've been demoing. This is a charting application and a backtesting system and notification system that we built with our own engineering team for our social network and our community. Okay, you get the backtesting, the scanning. For some people, they like the dark theme. You could also use the light theme. We have both themes available for you. I like the dark theme. But this also comes with unlimited backtesting, scanning, and charting. The cool part about that is if you like to geek out on this kind of stuff like I do, you can create all sorts of cool conditions like buy when this happens and this happens, sell when this happens, or sell, this is what's unique about ours, or sell when this happens. right? So maybe you actually want to test selling on the 7th bullish day instead of waiting to get stopped out. Well, you could actually test all of these conditions inside of one formula. Now, for other people, they may not want to geek out on this stuff. So we've created a really beautiful scanning system where you can scan for strategies inside of our platform. And our system is really, really smart, which means anytime a really great strategy is back tested by one of our community members, if it's a good one, that strategy becomes available via our cloud sourcing database and becomes available via the scan tab for everybody. So we've got really smart people in our group, and whenever they back test a great strategy, it becomes available for everybody. And that again is part of our philosophy, like no trader left behind, right? So if you don't want to geek out on building your own trades like I like to, just piggyback via our scan tool and our discover tool, and you can find the best strategies crowdsourced by our best traders. It's pretty cool. And you have unlimited backtesting, scanning, and charting. Okay. You're also going to get access to our alumni group of traders via our community and our live trade room. Okay. This is a 12-month access pass, and this is a $2,400 value for our Wall Street IO platform. It includes data. The platform is web-based. There's no downloads, and you could access it basically anywhere. We also have a really great mobile view now. Okay. Highlights from our membership. This is from Matt Webb. He says, hey, Micah, I want to thank you so much for providing an amazing platform for us. Since joining Wall Street IO, I tripled my options account and been constantly learning so much. Again, thank you. Wall Street IO platform, $2,400 value. Now, this is really cool because this is where I personally get to help you throughout the next year. You're going to get weekly live coaching for a year. This is going to give you access to live coaching every single week, plus the replays. Every Monday, I go live for an hour, and we do it all inside of our platform right here. And our chat that we actually built our own chat inside of our platform. So everything is all contained inside the platform. Okay. Now, the reason I do this is because I want to give you direct insight to how I'm seeing the market, and I want to do it live so you could ask me questions. I also would love you to meet the other members of our group. There's always a couple hundred people on these weekly coaching calls. Okay. You also get to learn as you earn or earn as you learn. You could ask me anything. Okay. This is a $3,600 value. And again, the reason I want to give it to you for a year is because as you go through the courses and get up to speed, you're going to have different questions along the way. Like you're going to start out down here, and then the PayDay Cycle Masterclass is going to bring you right up, and then you're going to plateau. The 90-day roadmap is going to bring you right up, and then you're going to plateau. And then you're going to ask me this critical question in our live coaching. Instead of plateauing, you're going to accelerate up. And then you're going to plateau again. 6 months later, you'll have a totally different question about like delta hedging or something. And then I'll be able to answer you live, and you're going to accelerate right up. So rather than just giving you a few videos to watch and telling you you're on your own, like I actually want to help you throughout the entire year to get you up to speed. Okay. So you're going to get the 1 year bonus of live coaching, and that's a $10,994 value. Now we have an amazing price. We're going to kind of bundle everything up for you. $1,997. And as my way of saying thank you today, we're actually going to give you a $1,000 coupon. This is going to be available until tomorrow at midnight. Okay. Now, everything here is available right now for $997, so under $1,000. You'll get the PayDay Cycle Masterclass right away. This is a 6-week course you could start today. You'll get the 90-day roadmap, which you could start right after that. You'll get a 12-month access pass to our Wall Street IO platform. You're also going to get a year of live coaching. All of this right here, this whole bundle basically is only $997. It's a pretty amazing price. So what I'm going to do right now is I'm going to put the link to get signed up because we've had a bunch of questions for it, and I'm going to put it right into the chat room for you. Okay, so let's see. This is going to go to everybody, and this is going to be your $1,000 coupon link that you can click right there to get signed up. Now, I've got a few minutes left here. I just want to remind you that this $1,000 coupon expires Sunday at midnight. It's at wallstreet.io/register. I also have a pretty cool bonus here that I want to talk about for the next few minutes. This is a fast action bonus. There's a lot of people here right now. It's available only for the first 10 people who sign up, partially because my time is sacred. I've got twins, I'm building a house, I do my own trading, my own investing, and I'm running this awesome, cool community. And so I wish I could do this with everybody, but I just don't have the bandwidth for it. But for the first 10 people, because I like to reward people who take action, you're going to get a free one-on-one call with yours truly. Here's what you're going to get in our call. We're going to find out where you're stuck as a trader. We're going to develop an action plan and roadmap to profitability. You're going to get a tailored walk through our platform designed to make sure you get the most from our tools and our resources. This is the same roadmap that I created with one of my students who turned the big fat loss into a massive gain. Okay, now a quick little thing here. When we started our community, we were mostly for people who stayed at home, retired traders. And as we started building these tools, we started to gain the traction of a lot of people who had bigger accounts and bigger firms. These folks said, what you and your team has built is pretty incredible. We began using it as a company. And since our membership, we haven't been able to put it down. They have $200 million in managed assets. They're now using Wall Street AO to backtest and analyze their trades. Okay. So I'm going to keep everybody up to date in the next few minutes for those 10 spots. Again, what you're going to get is the PayDay Cycle Masterclass, the 6-week course you could start today. You're going to get the 90-day roadmap. You'll get a 12-month access pass to the entire Wall Street AO platform. And you're going to get a year of live coaching with me. $10,994 value available today and tomorrow only for only $997. And if you sign up now, you'll get a live coaching call with me. Okay. In our strategy session with me, and again, this is only for the first 10 people. Okay, you're going to get a trader discovery sheet that you fill out. It'll only take you a few minutes. I'm going to ask you questions like your experience level. How good are you at following rules? What's your ability to gauge profit targets like? How are you at managing your trades? How many open trades do you have? What's your profitability versus loss? And are you looking for income or growth? You fill this out twice, once for where you are now and once for where you want to be. The reason you do that is because I review the sheet before our call and I look for areas where we have large gaps. And in doing so, I'm able to spend time with you in our call to pinpoint the exact areas of your trading that you need the most help with so that I can give you a framework right there and then on the call to help you improve and accelerate your trading. Okay, so if you sign up right now, what I'd like you to do is email support@wallstreet.io with a subject, send me the one-on-one, and our team will send you immediately a link to our trader discovery sheet. It'll take you 5 minutes to fill out. On the thank you page of that sheet, you'll get a link to my calendar, and you can actually get on my calendar today because it fills up really fast. Okay, so any questions? I've got a few minutes left here, and I can see there's already a few people signed up. What I'd like you to do is just post in the chat if you signed up. Got a few people here. Awesome, awesome. We got 4 people out of the 10 already signed up, so we got 6 spots left. Now, what I'm going to recommend is as soon as you sign up, here's what I'd like you to do. Come over here to the university. 2 things. Come over here to the university. Under Learn to Trade, we have a bunch of really great courses in our university for you. Come check out the PayDay Cycle Masterclass. The first 2 videos are there for you already. The next thing you can do is you can come down here to the help section. There's a few videos that'll basically walk you through how the platform works. We've done a great job onboarding to get everybody up to speed as quickly as possible. There are 12 videos here. They're all only 1 to 2 minutes long. They're going to show you how our backtester works, how you can manage everything and set up notifications and everything like that. I'd recommend starting there. Okay. So questions. 2 more signed up. Okay, so we got 4 spots left actually. Again, you're going to get the PayDay Cycle Masterclass, 90-day roadmap, 12-month access pass, and a year of life coaching for only $997. We've only got a few spots left here. Awesome, Jerry. Thank you. Looking forward to it. And again, remember, email support@wallstreet.io with send me the one-on-one. I'm going to post this link up right now. I have a feeling these 10 spots are going to fill up in the next couple minutes. I'll post it here. Any questions about our platform, let me know. Can you use the system on Forex? So right now we do not have Forex data. We have stock and ETF data. So Lily asks, does it work for ETFs? ETFs absolutely have seasonality, and yes, it absolutely does work on ETFs. You can backtest ETFs. So like the Qs, I mentioned this earlier, but we can review it here, right? If I want to go to the Qs and I could go to backtest and I can drag and drop the PayDay Cycle here, right into here. And remember, the platform here isn't just for trading PayDay Cycles. That's what we're going to get you started with, but you can backtest anything on here. So if you've ever been curious whether something you read about or learn about works, like actually works, you could backtest it in about 2 seconds. So absolutely works on the Qs. And yes, we do have seasonality data on the Qs. Okay. It's really, you need to go like that to get the seasonality data. Okay, so yeah, it works on ETFs. Good question. Any other questions? Package. So we don't have Forex data yet. We will likely get Forex data some point this year. We'll be doing Forex and futures at some point this year. Right now we have Amex, NYSE, and NASDAQ. Okay. Let's see. Is data free or does it cost money? So all of our data is included free, so you don't pay extra for data. You also have the access to the platform, which is web-based, which means you don't have to download anything. It works on a Mac or a PC. And everything is self-contained. So as soon as you sign up, you get right into our platform to get started. Okay. Let's see. You'll have to ask Renee about the replay. Good question, though. Ron asked about seasonality for Qs. Absolutely got that. Okay, we've got a couple spots left, 2 spots left. So if you're interested in signing up and joining me, I do encourage you to come and check us out. Remember, email support@wallstreet.io with send me the one-on-one. And again, here's everything you're going to get when you sign up. We'll have a couple more minutes here of questions, and then we're going to open up the presentation to the next speaker. My last question for the day is, what has been the biggest highlight for you today? Go ahead and let me know. Has it been the idea of payday cycles? Remember, payday cycles are these naturally occurring cycles. These payday cycles, by the way, they're 4 to 8 day trades, and they're already happening anyways, which is important, right? Because they're already there. Like whether I'm blowing underneath my chart to make the stock go up or what, like payday cycles are occurring. And so as a swing trader or a day trader investor, they're incredibly important to watch and analyze. Was it payday cycles? Was it the idea that you can now backtest via this new technology, basically any of the popular indicators on any stock, basically in the ecosystem on NASDAQ, NYSE, or Amex, or get notifications for them, or the idea of seasonality? It could be probability stacking, right? The idea that when you stack a couple things together, you could actually have a much higher probability of success. Now, I would love for you to join me in my community and learn from what we're doing. We've got a really amazing package for you for under $1,000. Remember, the coupon will expire tomorrow at midnight. I got the link up here for you. Go ahead and let me know if you have any last questions. Phil asks about futures. Futures and Forex will be available at some point this year. We do not have futures and Forex now. Parameter of the MACD, Donald, we're just using the basic MACD. This is not a broker, so you're not placing your trades from our platform. You're simply using our platform for analyzing stocks and strategies. Okay, so a couple of people say payday cycles. The other one was combining seasonality to your information. Appreciate that. Okay, cool. James asked for the replay. We got lots of people asking for the replay. I'm sure they're going to send it out, but you can check in with Renee about that. And I think my time here is going to come to an end. Thank you so much, everybody, for coming today. I really appreciate it. And I hope you learned something. If anything, hopefully you use this idea of probability stacking and payday cycles to cut those losing trades. Make sure you're staying on the right side of direction and momentum, and you're going to be all set. So I look forward to working with everybody who signed up today.